All right, diving into crypto today, folks. We're breaking down this super interesting conversation between Raoul Pal, macro investing guru, and Jamie Coots, Real Vision's top crypto analyst.
Yeah, this one is less about just price predictions and more about what really moves this market. We're talking cycles, emerging sectors, a roadmap for where things might be headed.
Roadmap, exactly. And Jamie's even got this model suggesting Bitcoin could hit, wait for it, $189,000 by August 2025. But hold your horses on that Lambo purchase. We got to unpack how he even got to that number. It starts with Jamie's background, not just some internet personality. This guy was in traditional finance at Bloomberg, covering sovereign wealth funds even.
Right. And it's interesting. 2008, the financial crisis, those Cypriot bank bail-ins, that's what got him looking for alternatives to the whole system. That's his Bitcoin origin story.
So he saw firsthand how traditional systems can just crumble. No wonder he's into crypto's decentralized nature.
Exactly.
But he didn't just jump on the bandwagon, right? He brought serious analytical skills from finance to this new world.
Oh yeah, he walks the walk. Combines technical analysis, deep fundamental research, and then even quantitative modeling, not just charts, actual value hunting.
That's reassuring, honestly, in a field where hype can be a lot. Now, key part of his approach is Metcalfe's law. I vaguely remember this from college, but crypto. Explain it.
Metcalfe's law basically says a network's value is proportional to the square of its users. More users on a social media platform, more valuable it gets, even if individual posts aren't worth much.
Okay, starting to click back into place. So in cryptoland, the more people actually using a coin transacting with it, the higher its value could climb, regardless of the dips we see all the time. Network effects.
Bingo! Jamie's research really shows this in action, particularly how user growth drives market cap.
Okay, but how do you measure real growth in crypto? You got bots, fake accounts, people with tons of wallets. Seems easy to manipulate.
Really good point. And Jamie totally stresses this. You can't just look at active addresses, gotta go deeper. Look for patterns in things like transaction fees, much harder to fake. It's signal versus noise.
So not following the hype train blindly, looking for actual growth in the network.
Precisely. Now, let's get to the prediction everybody's waiting for. Bitcoin potentially at $189,000 by August 2025. How did he pull that out of a hat? Global liquidity. That's the key.
Global liquidity. All right, lay it on me.
Imagine the tide. When global liquidity is high, money's flowing, asset prices go up, tide goes out, things get pulled back. Jamie uses things like global M2 supply, central bank balance sheets to track this.
So crypto being all new and sensitive, it's basically riding the waves of this big global money tide.
Exactly. And based on what he sees, historically, current indicators, he projects global M2 to peak at this first quarter of 2026. Bitcoin peaks about 160 days before that, August 2025.
A date, okay. But timing the market,
Can't call.
impossible.
Yeah.
Right. How sure is he of this?
Jamie's clear these are probabilities, not guarantees. He has multiple scenarios, different factors. Base case, purely on global M2 growth, $100,000 for Bitcoin, but halving cycles. Those suggest a higher peak, potentially $170,000.
So his $189,000 prediction, it's like an average of these different scenarios.
You got it. And he even has super optimistic ones, though less likely, $234,000, even higher. But let's be real, even $100,000, that's a massive jump from where we are now.
No kidding.
Yeah.
We got to zoom out here. Bitcoin's one piece. What about all the other cryptocurrencies, those altcoins? Where does Jamie stand on those?
He doesn't ignore them, no way. He actually breaks the market into sectors, uses this index, the Bitformance Top 200, covers 90% of the total crypto market cap.
The whole forest, not just the biggest tree. I like that. Tell me more about these sectors, though.
Okay, so first, the smart contract platforms. Think Ethereum, its competitors. Like operating systems of crypto, they let developers build all sorts of decentralized apps.
Not just coins themselves, but the tech behind so much of what's happening.
Precisely. Then there's DeFi, decentralized finance, creating financial services but on blockchain, lending, borrowing without banks.
So DeFi is aiming to disrupt the whole financial system. What else is Jamie watching?
He's super into the infrastructure sector, too. Data storage, oracles, even AI projects, building the base for a decentralized future.
AI and crypto, that's, wow, powerful combo. And of course, I mentioned the meme coins. They grab headlines, even if they're not the wisest investment.
Right, your Dogecoins, Shiba Inus, they have their place, but Jamie sees those peaking earlier in the cycle, much riskier compared to stuff with actual value.
Like lottery tickets. Huge upside, but you could also just lose it all.
Exactly. One thing that struck me, though, Jamie thinks Bitcoin's dominance, it might not drop as much this cycle as before. Why? He sees Bitcoin becoming more, not less important, used as collateral in DeFi, people locking it up to borrow other assets. Solidifies it as, like, the bedrock.
So even if folks are going wild with other coins, Bitcoin's still the foundation.
Exactly. He even mentions nation-states may be adopting Bitcoin.
Hold up, Bitcoin as a national reserve asset? That's wild. Wouldn't governments want to push their own digital currencies, though?
Some, sure. But others, maybe they want to diversify away from the US dollar or want that censorship resistance. Bitcoin's neutral. Worth watching, that's for sure.
Absolutely. So Bitcoin possibly hitting new highs, all these different sectors to keep an eye on, even nations getting in on the action. Crypto seems more dynamic than ever. But does Jamie have any, specific altcoins he likes?
Oh, he does. He really likes Sui and Near. Two smart contract platforms with huge potential. He compares their user base now, transaction fees, to what Solana was doing back in the previous cycle. See some similarities in how they're growing.
So he's looking for patterns, basically. Think these newer platforms could follow a similar path to success. But what kind of numbers are we even talking about?
He thinks Sui could get to $57 by August 2025. Near, hitting $32. If he's right, those are some serious gains.
Yeah, no doubt. But why Sui Ian? Is it just about price potential?
Nope. User growth, transaction volume, both already outpacing even Solana's early days. But he also looks at, the bigger picture. Comparing valuations across different cycles, thinks things are getting more rational as the market matures.
So back in the day, Solana got to a similar market cap, but with way fewer users, lower fees than Sui and Near have now.
Exactly. He sees room for these newer platforms to go even higher based on stronger fundamentals. Plus, lots of developers building on them. That's key for the long game. Not just price. The whole ecosystem matters.
Makes sense. That's what separates a gamble from actual tech that's useful.
Totally. He sees Sui and Near as potential giants in the smart contract space. Maybe even challenging Ethereum someday. Who knows?
It's crazy how fast things change here. Every few months, new tech, new potential winners popping up.
That's the beauty and the beast of crypto. Keeps things exciting, but gotta keep learning, adapting all the time.
Speaking of adapting, Jamie also talked about the overall health of the ecosystem. Beyond price, how do you even measure that?
He uses all these on-chain metrics. Active addresses, fees, stablecoin transfer volumes. It's about underlying activity, not just how much things cost.
Proof that people are actually using it, not just gambling. Checking the pulse of the crypto network.
Exactly. Looking for signs of a real economy, not just a casino.
One thing that stood out, he kept saying, look at the aggregate level. What's that mean?
Zoom out, basically. Don't just fixate on individual coins. Look at overall trends across the whole crypto market. When he uses Metcalfe's law, it's total active addresses, transaction volume, everything, not just Bitcoin or Ethereum.
Like looking at a country's GDP, not just one company's stock. Big picture health check.
Exactly. Aggregate view shows you if crypto as a whole is growing, getting adopted.
That's helpful for sure. Easy to get lost in the hype of a single coin, forget it's all part of this giant thing. Speaking of giant things, what about regulation? The big unknown. Does Jamie factor that in?
He doesn't predict specifics, no crystal ball there, but he knows it's huge. Thinks some clarity from regulators would actually be good for the industry. Less uncertainty, more institutions might jump in.
Right now, it does feel like the Wild West out there. Some rules, even if they're restrictions, might be welcomed by a lot of people.
True. But he warns against going too far, stifling innovation. Regulators gotta walk this tightrope, protect consumers, but let the tech grow.
Tough balance to strike. Too much regulation, you kill it. Too little, chaos.
Exactly. Gonna be interesting to see how this all unfolds, but regulation, it's gonna shape crypto's future big time.
Now, Jamie's very data-driven, which I like. But does he ever talk about, the human side, the communities that build up around these projects?
He touches on it, yeah. Especially with meme coins, how social media can really drive things. Strong communities can be powerful, early on especially.
Like the early internet days. Passionate groups driving all the innovation, experimentation.
That's it. And that spirit is alive and well in crypto. These communities forming around projects, sharing ideas, building tools, spreading the word, that's what makes it so dynamic, so exciting.
Okay. It's that sense of, shared purpose. They believe in this tech. Not just buying tokens, joining a movement.
Right, not just about profits. It's about building something new, changing the world even.
Jamie comes from traditional finance. Has he talked about how his views on crypto have, changed over time?
He has, yeah. When he first learned about Bitcoin, he was skeptical, like a lot of folks in finance. Didn't quite get it.
I think a lot of people can relate to that. It's such a different world than what we're used to in finance.
For sure. But the more he learned, the more he was fascinated by the tech, the potential. He started seeing those parallels to the early internet.
Yeah, that's a common one. Internet disrupted information. Could crypto disrupt finance?
That's the million-dollar question. Jamie seems to think so, sees it as this transformative force, changing how we think about money, value, even governance.
Definitely a space to watch, even if you're not investing yet.
Absolutely. And Jamie's research is like a guidebook for this crazy, ever-changing landscape.
One thing he really emphasizes is this multidisciplinary approach to analyzing crypto. What's he mean by that?
You can't just rely on one type of analysis, like just charts or just the fundamentals. Got to use everything, get a complete picture.
So not just charts, not just fundamentals, blend it all together.
Right. He'll use technical analysis to spot trends, patterns, and price, but then he digs into the fundamentals too. Adoption rates, transaction volume, developer activity, the whole 9 yards.
And on top of that, he adds quantitative modeling, bringing in the data, the stats.
Exactly. No but feelings here. Data and solid modeling techniques back up his analysis. That's what makes it so interesting. It's not just someone's opinion. It's data-backed, researched, and he's got the experience to back it up.
Not just numbers, but the story behind those numbers.
Exactly. He takes complex data and turns it into something investors can actually use to make better decisions.
Okay, let's talk about this liquidity cycle thing. What is it? Why should crypto folks care?
The liquidity cycle, it's basically like the ebb and flow of money globally. When liquidity is high, tons of money sloshing around, asset prices go up. When it dries up, things cool off.
Like the tide affecting everything, crypto included.
You got it. And crypto, being so new and volatile, it really gets pushed around by these big shifts in global liquidity.
Makes sense. So how does Jamie use this whole liquidity cycle idea in his analysis?
He tracks a bunch of indicators: global M2 supply, central bank balance sheets, interest rates. By looking at all that, he gets a feel for whether money's flowing or drying up, how that might impact crypto.
Like a weatherman, but for the global financial system, predicting the crypto climate.
Spot on. Uses it to pinpoint potential turning points in the market, bullish or bearish. Another layer of insight beyond just crypto itself.
That's a really good point. Crypto isn't isolated. It's part of this giant interconnected financial system.
Absolutely. And understanding how it all connects, that's key to making smart decisions. Now, another interesting thing Jamie mentioned was this whole Bitcoin as collateral in DeFi thing.
Yeah, he touched on that earlier. Can you break that down a bit more? Why is it such a big deal?
Basically, people are taking their Bitcoin, locking it up in these DeFi protocols as collateral to borrow other crypto assets or to earn interest. This drives demand for Bitcoin, solidifies its role as a foundational asset.
So even if folks are playing around with other coins, Bitcoin's still the underlying security. Like, you use your house as collateral for a loan. You might use that loan to buy stocks or whatever, but the house is still there, still valuable.
Exactly. Jamie sees this as a sign that Bitcoin's becoming more than just something to speculate on. It's a core piece of this whole decentralized finance system.
This is really interesting. So this trend could make Bitcoin even stronger, even as other coins get popular.
That's Jamie's argument. Bitcoin's the most secure, most decentralized. Plus, this collateral use case, all that keeps demand high, supports the price.
It's evolving from like a pure bet to something with actual utility, real-world uses.
It is, and that's why institutions are getting interested. Not some fringe asset anymore. It's a store of value, maybe a hedge against inflation.
Okay, but let's say you buy into Bitcoin. What about all the other projects? How do you choose in this sea of altcoins? What does Jamie say?
He says don't just chase price, especially in this market. Price can lie.
So what else should people be looking at beyond just how much was it worth today?
Adoption rates, transaction volume, developer activity, the whole ecosystem around a project. Those are better signs of long-term value than just, a pump and dump.
Like evaluating a company.
Yeah.
Is it building something useful or are people actually using it?
Exactly. Strong fundamentals, growing users, a solid network, developers building stuff. That's what drives real growth.
It's about looking beyond the hype, seeing what's actually being built, what's being used.
Right. Easy to get tricked by a flashy website, big marketing, but what matters is there substance, a real use case, a community behind it.
Cutting through the noise, crucial skill in any market, but crypto especially.
Absolutely. That's where Jamie's multidisciplinary thing comes in. Technical analysis, fundamental analysis, the modeling, all that helps him find promising projects, even if they're not mainstream yet.
Like a venture capitalist. But for crypto, hunting for the next big thing before it blows up? finding the hidden gems.
Kind of, yeah. Identifying projects that are building something innovative, something valuable, even if most people haven't heard of them yet.
That's a cool perspective, seeing the potential before everyone else does.
Exactly. That's what makes this space so exciting. It's a frontier. New ideas, new innovations constantly popping up.
Speaking of exciting, Jamie also talked about nation-states possibly adopting Bitcoin. That's like a huge concept to wrap your head around.
It is, for sure, and it's sparking a lot of debate.
Walk us through it a bit. Why is this such a big deal?
The idea is some countries, especially those that want to diversify their reserves, move away from the US dollar, they might start holding Bitcoin.
Hedging against geopolitical risks, the dollar potentially losing its top spot.
Exactly. Bitcoin, decentralized, can't be censored. It's an attractive alternative, especially with all the tension in the world right now.
It's a bold idea.
Yeah.
But some people are taking it seriously.
They are. And if a bunch of countries did this, it could be massive for the crypto market, drive demand for Bitcoin way up, make it even more of a global store of value.
Definitely something to watch. But gotta remember, predicting the future, especially with crypto, it's almost impossible.
True. So many things could change how this plays out. Regulation, new tech, how the broader market's feeling. But Jamie's research, it gives you a framework, helps you understand the forces at work, make better decisions.
Speaking of his research, one big takeaway for me was that global liquidity thing. Why is it so important for crypto investors to get?
Global liquidity, it's basically how much money is available for investing globally. When there's a lot, asset prices go up, crypto too. When it tightens, things cool down.
Like that tide analogy again.
Right.
Affects everything.
Exactly. And crypto being so new and volatile, it really gets pushed around by these changes. Jamie tracks all those indicators, the global M2 money supply, central bank balance sheets, interest rates, to get a feel for where we are in this cycle.
The financial weatherman, but specifically for crypto.
You got it. He uses this to figure out when the market might turn bullish or bearish. Gives him an edge.
Now, one challenge is that crypto's so new, there's not much historical data. How does Jamie handle that in his research?
He's actually really creative. He takes traditional financial analysis techniques, adapts them for crypto. He's done a lot of work with Metcalfe's law, the network value thing. He's also built models for understanding crypto cycles based on those global liquidity indicators, and he backtests them against whatever data is available.
So taking the old rules, tweaking them for this new world, not throwing the book out entirely, just adapting it.
Right. Crypto is unique, but the basic economic principles still apply.
Smart approach. And speaking of smart, Jamie's really data-driven. How does he use that data for his predictions?
He uses everything. On-chain data, market data, macroeconomics, active addresses, transaction volume, how fast the network's growing, and all those global liquidity indicators we talked about.
Micro and macro, seeing the details of the crypto market, but also how it fits into the bigger picture.
Precisely. Got to have that holistic view to understand what's driving crypto.
He doesn't just look at raw data, though. He builds models, frameworks to interpret it all.
Right, not just throwing numbers around. He uses them to tell a story about where the market might be headed.
That's what makes it so valuable. Not just numbers, it's understanding what they mean.
Exactly. He can take complex data and turn it into insights investors can use to make better decisions.
Now, one thing I found interesting was his idea that crypto valuations are getting more rational.
Yeah, he thinks the market's maturing. Investors are getting smarter about where they put their money, not just a free-for-all anymore.
Moving away from the hype of the early days. People asking tougher questions, looking beyond the marketing.
For sure. He sees it in how investors are valuing newer projects compared to the old ones. Like Sui and Near, they have better fundamentals than Solana did at a similar stage, but they're trading at a discount right now.
So more focus on real value, like when you analyze a company in traditional markets.
Right. Adoption, transaction volume, developer activity, those are becoming more important than just hype.
That's good, right? Means the market's getting healthier, more sustainable.
I think so. Moving past that Wild West phase.
But let's be real, even if it's maturing, it's still volatile. How does Jamie even make price predictions, knowing how unpredictable things are?
He's all about probabilities, different scenarios, different likelihoods. Doesn't claim to know exactly what'll happen. Gives a range of possibilities, with the chances attached.
More about understanding what could happen, managing risk, than nailing a precise number. Acknowledging the uncertainty.
You got it. Not trying to time the market perfectly. Giving investors a way to think about risk, reward for different choices.
That's a lot more responsible than some of the crazy predictions you hear out there.
Definitely. Not promising riches, just giving you the tools to make informed decisions. based on solid analysis.
Now, we've talked Bitcoin a lot, but Jamie keeps saying it's becoming more than just a speculative asset, evolving, taking on new roles.
Yes. More utility, real-world use cases beyond just digital cash.
Like what?
Mm-hmm.
What are some of these new things Bitcoin can do?
We talked about the collateral and DeFi thing. Unlocks the value of your Bitcoin without selling it.
Like leveraging your assets, but you still own them.
Exactly. And the nation-state adoption possibility.
Countries hedging against the dollar, looking for alternatives.
He even talks about using Bitcoin for more secure supply chains or faster cross-border payments.
So it's about solving real problems, using blockchain in new ways, not just finance anymore.
Right. And the more these uses pop up, the stronger Bitcoin's position gets.
It's come a long way from those early days as this weird fringe tech. Now, Jamie also talked about the competitive landscape in crypto. What do you say about that?
He says it's not just Bitcoin versus Ethereum. There's a ton of blockchains, platforms fighting for attention. It's constantly changing, new players all the time.
Crowded space. How do you pick the winners?
Do your research. Understand what each platform does well, what it struggles with. He says look beyond market cap, price, transaction speed, scalability, security, the developer community.
So understand the tech, the team behind it, not just which coin is hot right now.
Exactly. Jamie's research helps with that, helps you evaluate, identify the ones with staying power.
He's done the hard work so we don't have to. One thing that stood out, he's big on the long game, not the get-rich-quick mentality you see a lot.
Absolutely. Crypto's still early.
Yeah.
There's going to be ups and downs. It's a roller coaster, not a straight shot to riches.
So be patient, invest for the long term.
Exactly. Focus on fundamentals, invest in projects that are building something valuable. Don't get distracted by the price swings.
That's where Jamie's work is so helpful. Gives you a roadmap, a framework, helps you navigate this crazy market over time.
Couldn't agree more. And brings us back to one of his big points. Look beyond Bitcoin. See the whole crypto ecosystem.
Because it's way bigger than just Bitcoin, right? A whole world of innovation.
It is. And Jamie wants people to explore that world, the different sectors, the projects building real value. He talks about smart contract platforms, DeFi, infrastructure, NFTs. Tons of potential in those areas.
Not just choosing sides, Bitcoin or Ethereum. It's understanding the whole landscape, all the opportunities.
Exactly. And the community aspect, too. The people around these projects, they drive so much of the innovation, the adoption. It's not just tech, it's people. Sharing beliefs, working towards this decentralized future.
That energy, that passion, it's contagious. Crypto's more than just an investment, it's a movement.
It is. And Jamie, with his data-driven approach, his enthusiasm, he's like a guide for anyone who wants to join that movement.
This has been an awesome deep dive into Jamie Coots' work, what's happening in crypto. What are some key things our listeners should remember as they explore this world?
Biggest thing, crypto's complex. It's volatile, but it's also a huge opportunity if you're willing to learn, adapt, and think long-term. Jamie's research gives you a roadmap. Understand the market, make smart decisions that fit your goals.
Love that. So to everyone listening, whether you're a pro or just starting out, do your research, think for yourself, and don't be afraid to dive in. Want to learn more from Jamie? Check out Real Vision's website, their YouTube channel. Amazing analysis there.
Tons of great information for anyone who wants to understand crypto better.
Makes sense. It's about betting on the whole crypto ecosystem's growth. For crypto to really take off, it needs that solid base.
Exactly. And Jamie thinks as the market gets more, mature, investors will see how important good infrastructure is. And those project valuations, they'll go up.
Investing in the foundation of crypto's future. I like that. What else is interesting about Jamie's approach?
He's not afraid to challenge the common wisdom, go against the grain, question those assumptions everybody takes for granted.
Give me an example.
Bitcoin dominance. Lots of analysts think Bitcoin's market share is going down, right, as other coins get bigger. But Jamie, he says Bitcoin being used as collateral in DeFi, countries maybe adopting it, all that could actually make it even stronger.
So Bitcoin doesn't fade away, it becomes even more important.
Yeah. It's not just this old, outdated thing. It's got a future.
Bold take, for sure. Makes you think. That's why I like his work, not just following the herd.
Exactly. It's easy to get caught up in the hype, but Jamie shows you got to think for yourself.
Be a critical thinker. Speaking of which, Jamie also talks a lot about market cycles. Why are those so important for crypto investors?
He says knowing where we are in the cycle helps you make better decisions. Cycles are these periods of growth, then contraction. Driven by global liquidity, sentiment, new tech, he tracks price trends, on-chain data, macro stuff, to figure out which phase we're in.
Like the seasons of the crypto market. Spring, summer, fall, winter. Each one has its own vibes, its own opportunities.
Perfect analogy. Knowing which season it is helps you figure out when to invest, when to take profits, when to play it safe.
So where are we now? What season is it in crypto land?
He thinks we're in the early part of a new bull market. Could last for years.
Spring is sprung, huh? What's behind this optimism?
More institutions get involved. Bitcoin as collateral, the nation state thing, all that's creating a good environment.
Positive vibes, but even in a bull market, gotta be some bumps, right?
For sure. He's long-term bullish, but there will be volatility corrections. That's just how markets work, crypto especially.
Hold on tight. It's gonna be a ride.
Yeah.
But even with those ups and downs, Jamie sees a lot of potential for people who approach it the right way.
He does. Manage your risk. Don't put all your eggs in one basket. And don't get swept up in the hype. Think long-term.
That's where his analysis shines. It's not about predicting every little price move. It's about understanding the big picture, navigating this market over time.
Absolutely. And it goes back to his point about seeing the whole crypto ecosystem, not just Bitcoin.
Right. Crypto's this massive universe of innovation.
It is. And Jamie wants people to go explore it, learn about the different sectors, find the projects that are building something worthwhile, smart contracts, DeFi, infrastructure, NFTs. So much potential there.
Not just Bitcoin versus Ethereum. See the whole picture, all the opportunities.
Exactly. And the community aspect. The people behind these projects, they drive so much of what's happening. It's not just tech, it's people sharing beliefs, building this new world together.
It's inspiring, that energy. Crypto is more than just an investment, it's a movement.
It really is. And Jamie, with his data and his passion, he's a great guide for anyone who wants to be part of it.
This deep dive's been fantastic. Any final thoughts for our listeners out there trying to make sense of it all?
Crypto can be confusing, it can be risky, but it's also an amazing opportunity. If you're willing to learn, adapt, play the long game, Jamie's research is a great resource. Understand the market, make good decisions.
Perfectly said. So whether you're a seasoned crypto pro or just dipping your toes in, do your research, think for yourself, and explore. Want more from Jamie Coots, Real Vision, their website, their YouTube. It's a goldmine of information.
Some of the best crypto analysis out there for sure.
And speaking of gold mines, if you enjoyed this deep dive with Brenda and Mike, hit that subscribe button on our YouTube channel. We love making this stuff, and your support means the world to us. See you next time.